Well, what a morning to be kicking off Iconoclast with one of the most influential voices of our generation, Ken Griffin. Few individuals have shaped the modern financial landscape as profoundly as he has, both with Citadel, which has over $66 billion in assets under management, and according to LCH Investments, is the most profitable hedge fund in history. And with his market-making powerhouse Citadel Securities, which is responsible for about 1 in every 4 US equity trades every single day. Ken, it's an honor to be here with you today. Thank you for joining us.
It's great to be here.
So Ken, I want to jump right into the $10 trillion question, which is on everyone's minds, which we're going to get right into. But before we do, I thought it would be great to key the audience in on your long history with Forbes, which goes quite a ways back, all the way to your Harvard dorm room. Right, Ken?
Wow, so we're going to open with Harvard right out of the gate. So yes, when I was studying as an undergraduate at Harvard, Forbes published an article on the recent IPO of Home Shopping Network. Gretchen Morgenson actually was the author. And the article, in some sense, defined HSN as the meme stock of that moment in time. And I bought 2 put contracts on Home Shopping Network and was very fortunate. The stock did partially collapse during the life of those puts. And ready for this? I made a few $1,000s. But when you're a freshman in college, a few $1,000s is all the money in the world. And it certainly piqued my interest in trading. And from there, the rest is history.
So basically, you owe your billionaire status today to Forbes.
I do.
Great. Now that we set the record,
I suggest that if you want to be a billionaire, you subscribe to Forbes.
we can't ask for a better...
Are we done for the day?
No. We're just getting started, but we can't ask for a better vote of confidence than that. So Ken, we were just on stage together just a few weeks ago when the world was reacting in real time to President Trump's tariffs that had just gone into effect overnight. You said then that this was a huge policy mistake by the administration. You're far from alone. We've seen tremendous amount of volatility in the markets. Where are we today, and what is your outlook for the rest of the year?
So what's remarkable is that now feels like a few years ago, doesn't it?
It feels like a lifetime.
And it's only been a few weeks.
Few weeks.
And I think that everything we spoke about that day is unfortunately still true today, which is that the administration's attempts to use tariffs comes at a dear price to the US economy and comes at a dear price to the US consumer, who will undoubtedly face higher prices in their day-to-day life because of these actions by the administration. You know, recently, the courts have thrown the issue of the legality of the tariffs into question, but the administration does have other paths by which they can pursue their agenda of erecting protectionist policies that will inevitably come at a dear cost to the American people.
So what do you make of the court ruling? Do you think that's at least going to slow down the train a bit? Is it at least going to temper the administration a little bit?
Well, I think unfortunately what it's going to do is just continue to drag out the uncertainty. And the uncertainty is both reducing CapEx by corporate America and slowing the rate of hiring. You know, our best estimates for growth this year are about half of what they were when Trump became president. So the tariff policies have really taken their toll already on our economy.
Back in December, you were very excited about the incoming administration because you felt that America was open for business again. Obviously, since then, your views have changed, but do you think that there is potential to right this train? What are some of your
So unquestionably, I'm going to own it. I publicly said America's open for business, and I really thought we were looking at 4 years of just tremendous growth and tremendous American economic vitality. You know, unfortunately, the last few months have been characterized by a set of policy decisions that have rendered a great deal of uncertainty, have called into question American exceptionalism, and yet there's still hope that the administration pivots and goes back to the pro-growth, low tax, deregulation, America's open for business mindset. There's still hope that that happens.
Mm-hmm. So some of your conversations, you've been all over the world. You've been in the Middle East, you've been in China, you've obviously been in DC. What are some of your closed door conversations? What are people responding to the current environment here?
Look, around the world, when it's all said and done, people want this country to succeed. I mean, it's just the genuine warmth towards the United States around the world is tremendous. Because the United States has been, for the world, not just a huge source of economic growth globally for the world, but has also been an important player in maintaining global order, global security, global peace. So around the world, the common theme is our allies, and even those who we have more difficult relationships with, want to see the United States continue to play its important leadership position.
Mm-hmm. So a few weeks ago, you were feeling very concerned. How are you feeling now? Are you just as concerned, a little bit less concerned?
So how much has my mental state changed in a few weeks? Look, here's the big picture. It is great to see the continued innovation in so much of our economy. If you look at the dynamics that are unfolding within the software engineering, the artificial intelligence arena, look at what's happening on the West Coast of the United States, look at what's happening in biotech in the United States. There's still great reasons for optimism about the underlying strength of our economy. But on the other hand, it's still frustrating to see that we are leaving so much opportunity on the table.
Mm-hmm. On the other hand, a couple weeks ago as well, we were looking ahead to President Trump's first 100 days. You had made an interesting point that if you're looking at all of the issues that we're trying to get across the table, it was an ambitious list.
The president has an incredibly ambitious agenda. And some of it he actually executed on within the first few days of being president. I mean, the borders between the United States and Mexico now being secure, what an accomplishment. What an incredible accomplishment to bring a sense of national security to our borders. Long overdue. And then on the economic front, they're moving quickly to pass, I'm not going to use their choice of words, the big beautiful bill, because it's a bit over the top for what it is.
Well, we're going to get right to that next.
But they're working quickly to advance the president's pro-growth agenda. I think none of us anticipated the anti-growth agenda intrinsic in tariffs. I think that's been the real wild card surprise.
Mm-hmm. Yeah. So speaking about the big beautiful bill, Elon Musk just this week attacked Trump's bill, calling it a massive, outrageous, pork-filled congressional spending bill and a disgusting abomination. What do you make of this very public about-face, and what are your thoughts about the bill?
Well, I mean, Elon's always interesting to read. He's never short on his choice of words, and he feels very strongly about the magnitude of the spending in the bill. And without having to get into the details of the bill, the United States' fiscal house is not in order.
Right.
You cannot run deficits of 6 or 7% at full employment after years of growth. That's just fiscally irresponsible. Mm-hmm. And the challenge is when will the American legislatures step up to the plate and focus on how do we put our fiscal house in order in America? Fortunately, there's enough private wealth, household wealth across our country to absorb this onslaught of government debt financing. But that won't last forever. Mm-hmm. There will come a time we have to have our fiscal house in order.
I think early calculations have it as this bill will add another $2.4 trillion to the deficit, correct?
So the bill will unquestionably add several $1 trillion. I think we're too much in the give and take and a little bit of mathematical magic happening to really know how this will score in the end.
Are there components of the bill, though, that you think could work, that are good for America?
So, I mean, obviously, large piece of legislation. There's a lot of very interesting concepts in the legislation. The challenge with the legislation is there's not enough tough decisions. There's not enough decisions around how we're going to put our fiscal house in order. If we look, for example, at the continued reduction in tax rates for small and medium enterprise businesses, I'm not sure what we're going to achieve with that. That wasn't That wasn't on the items of things that people were concerned about. They addressed this the first time around. So there's a lot of question marks in the bill as to why we're continuing to increase our tax cuts when we have a fiscal deficit of this magnitude.
We're going to go a little bit further into U.S. debt next, but I do want to ask you just about the overall economic environment, the economic picture. Looking at where we are with rising inflation, despite the latest CPE number, because I think there are some other thoughts that are maybe fully researched, slower economic growth, and where we are with unemployment, are we heading into a textbook stagflation scenario?
So it would be a textbook stagflation scenario. The question is it for several quarters, or does it become for several years? That's really the question. Is the shock from the tariff policies one-time in nature, or will the scramble to build manufacturing in America put us into a wage growth spiral for years to come? That we don't know the answer to, but that is a real risk in the current environment.
Really quickly, though, on manufacturing, I mean, it's a bit of a misnomer, right? Because I think you had said, and Dave Chappelle had said too, right? Americans want to wear Nikes, not make them. And really, the economic impact of manufacturing, if we were to pivot, isn't really what's going to put America back on track.
Well, there's a variety of different types of manufacturing. I don't know why we strive to bring back low value-added products to the United States for manufacturing. When you're manufacturing low value-added products, there's no money in it for anybody. And there's certainly no money in it for the people who are doing those jobs. So I don't understand for the life of me why we aspire to bring back to the United States jobs that are actually moving out of China into lower cost jurisdictions. Why are we aspiring to be the nation of the lowest cost and lowest paid workforce in the world? That makes no sense to me.
Anecdotally, that came up during your meeting in China, right, in March?
One of the Chinese leaders did ask the question. You know, China dreams to be like the United States, a nation of very high value-added jobs, a nation rich in services, a nation rich in IP development, a nation that has a stunning GDP per capita. And China aspires to be like the United States. It's been their big push over the last 10 years is to move to a higher value-add economy. And literally he asked, like, why are you trying to be like China? Like what, like he just, the look of befuddlement. Like, we want to be like you, why are you trying to be like us? And there's no good answer to that. Like, we should not be trying to bring back, in some idealistic way, jobs that just will never pay much. Now, having said that, obviously we need to take steps to encourage manufacturing of high value added products, and in particular products that are important to our national defense. But, you know, it's one thing to make Nikes, it's another thing to make F-35 fighters.
Right.
And the factories are not fungible, the skills are not fungible, like we're missing the target here.
So now that we've laid this economic backdrop, I want to circle back to our U.S. debt. We're at a staggering $36 trillion.
Do we have any feel-good questions?
Do we have any what?
Any feel-good questions?
Yeah, those are at the, like...
At the end?
Yeah, we still have almost 10 minutes.
Okay.
I want to try to break as much news as possible, so, yeah. So let's go back to the U.S. debt. Staggering $36 trillion. And questions about continuing U.S. dominance and the dollar are recurring questions, but still worth exploring. Is this time different?
I mean, what's happened in just the last few weeks is we saw the United States lose its last AAA investment grade rating. And if you look at the credit default swap market, which has its issues with liquidity and so on and so forth, but just, you know, in rough strokes, the risk of U.S. defaults priced roughly the same as Italy or Greece, which is just, like, there's no words for it. I saw this chart yesterday of the relative CDS spreads of European countries in the United States, and I never thought in my life I would see us priced higher in risk cost than a number of countries like Spain, or Germany or France. I mean, you've got to be kidding me. And again, it's a market that has its challenges with liquidity and so on and so forth, but the fact that it's even a conversation is unfathomable. The sanctity of the dollar as the reserve currency of the world, the sanctity of treasuries as being the safest asset in the world, there's tremendous value to our economy every single day that those two statements are true. It means lower prices for mortgages. That means a house is more affordable for the American people. It means the cost of capital for businesses is lower. That means we will create more jobs in the United States. We should protect the value that we enjoy as a nation of being the reserve currency of the world. And with that comes a responsibility, going back to the budget process that we're in, going back to the economic policies that we pursue. We have a responsibility to protect these attributes that really do enrich the lives of everyday Americans.
So what
I mean, if credit spreads on US Treasuries go 100 basis points wider, the cost of a new home mortgage goes up by about 15%. I mean, it's just, the impact to the American consumer's bottom line is real.
And do you think that, going back to the bill, this is the administration's attempt to try to help the American people in the face of all the backlash of these tariffs?
Well, you know, the problem is that it's not, I can't take away from you with this hand and give to you with this hand and you come out the same because you're not the same person.
Right.
All right, so if we're not going to tax tips because the people who earn tips are affected by higher prices at Walmart, that's only a small fraction of the people that shop at Walmart. You know, what about the woman who works 12 hours a day to clean hotel rooms? Like, she doesn't get paid tips.
Right.
That's how her bills are paid. So this idea that we're going to try to make up to people with a series of tax cuts that are targeted in some sense, tips over time, because they're going to pay higher prices at Walmart day in, day out, that just doesn't work.
I mean, we've been hearing the administration's response to several corporations' response, including Walmart, not understanding how to pass on that cost to the consumer.
Look, you know, we should not criticize CEOs for being honest.
Right.
Right, and that's all the CEO of Walmart was being. He was being honest. And shame on the administration for criticizing an American CEO who has done an extraordinary job of helping to have people get more for their dollar, more for the hours they work, for just being honest.
And also, what about the comparison then to other corporations like Amazon, who've said that they're not going to be passing on the cost? It's,
I'm just going to tell you, I give a lot of credit to the CEO of Walmart for being honest.
Okay. So I want to shift now. As I said in the intro, you run arguably the most successful hedge fund in the world. I was with you a couple weeks ago in the green room. Everyone wants to know from you how to play this market. I know you've also said it's not the most compelling opportunity. Tell us where the opportunities might be.
So right now, the biggest challenge for any investor is to try to understand how to navigate this moment of policy uncertainty. The problem is the underlying businesses are grappling with the same uncertainty. I was with a group of about 150 American executives in the last few days, and about 30 to 40% of that group said the last few months have been the most challenging period they have faced in their entire careers as leaders.
More than the financial crisis?
Isn't that interesting?
Wow.
30 or 40% have found the last several weeks to be the most challenging period of their career. Because they're building entire teams trying to understand how are they going to navigate the supply chain challenges that are unfolding. I mean, you know, here you've got the auto companies literally in a state of panic about how are they going to build cars without access to rare earth elements from China. It's a complete panic. And this is not getting enough attention right here, right now.
So zooming out to the global stage, to the Middle East and Ukraine and China, peace in the Middle East and in Ukraine has remained elusive. Will we get there, and what is the role of the US to play?
Outside of my wheelhouse. Okay. Outside of my wheelhouse. But the big picture is the United States' interest in the Middle East is much more complicated than ever. because of American creativity and engineering prowess, we have created fracking. And we have created for our country energy independence from the rest of the world. It's one of the least spoken about stories in American history the last 2 decades, has been the fact that the United States, for the first time in our lifetimes, is energy independent from the rest of the world. And that progress just continues to move forward. Like, kudos to the American energy industry for what they've accomplished. So now in the Middle East, the importance is peace in the Middle East is relevant for the world for global energy prices. And the United States has a vested interest in global prosperity because we are such a large exporter of goods and services to the entire world. And then as a matter of principle, the United States has a longstanding vested interest in a number of the countries in the Middle East. And I believe that the president, his fight for peace in the Middle East is a fight worth having. Mm-hmm. Trying to secure peace in the Middle East that's long-term and lasting in nature, which they have a chance of doing right here, right now, will have a profoundly positive impact on both growth in the region, energy price stability going forward, and manifests, in some sense, the best of American values.
So something that's not outside of your wheelhouse, China. We've heard the administration and the president say it's very difficult to negotiate with China. What advice would you give the administration on considering where things stand now? Some are saying we might be at a stalemate. What advice would you give the administration?
I mean, we're going to be at a stalemate with China to the extent that we try to bully China. If a country tried to bully America, how would we respond? And the Chinese are a rightfully proud people, and they don't want to be bullied. And both countries in our global economy and in our day-to-day activities are deeply intertwined. We spoke about just rare earths a few minutes ago. I think the best strategy with the Chinese is to be firm in our concerns, which are well-founded. China has had an extraordinarily good deal with America over the last quarter of a century. The Chinese have clearly erected barriers to American businesses competing in China. And there is a justified frustration and anger with the Chinese about American access and equity in our relationship. Mm-hmm. But I think that the best way to negotiate with China is from a matter of first principles and in a way that shows mutual respect between our two great nations.
Okay, so now on to some feel-good questions. Your dad was an engineer at GE who worked on the Apollo space program. That was such a seminal moment in American history. What can we do to bring America back to that level of innovation and competitiveness?
Well, let's go back to Elon Musk. Did you watch the booster be captured by the pincher on the way down?
Yes.
All right. Can you imagine that we are actually able to launch a rocket and capture it between two prongs? I mean, what an unbelievable technological accomplishment. And similarly, NVIDIA and their processors, what an incredible accomplishment. American ingenuity is very much alive and well, and all we need to do is to let American entrepreneurs get on with what they do best. This country, the embracing of risk, the creative energy, the depth of intellectual know-how, much of it thank you to American universities, which we need to protect, which we need to respect, and which we need to see flourish. These are important drivers of the future of our country.
And circling back to American resilience, with so much going on, as we've discussed, what are you optimistic about right now?
I mean, it's really powerful to watch American corporate executives say, all right, how do we navigate these cross currents? No one's giving up, no one's throwing the towel in, everybody's focused on how do we just navigate these choppy waters and move forward. And that's a statement about the resiliency of our nation, that we're gonna move through this period of time, we're gonna land on our feet, and we're gonna march forward. The key is Washington does need to put our fiscal house in order. They do need to make that happen, and they do need to appreciate that every time you're changing the rules, you're taking away from much needed growth. And the United States desperately needs growth to satisfy our obligations with Social Security, Medicare, Medicaid. The entitlement programs will only be fully funded if we really let our economy fire on all 8 cylinders.
Thank you, Ken. As a final thought, I just want to circle back to this impressive audience that we have here today, 17 countries represented, live streaming all over the world. If there's one call to action that you would want to communicate to the folks in this room and at home watching, what would that be?
One call to action. Actually, my one call would be to the White House to make sure that all 17 countries, that the people who come here feel welcomed in America.
That's great. Thank you, Ken.
So you can see that.